Okay, so I did a video yesterday talking about how we could potentially have a large drop, and we did have a large drop. Um, I said that the target could be somewhere around 53, say 53 and 53.5. We actually dipped a lot farther than that. We went all the way, looks like on Coinbase, we went all the way down to 51.3. So we had a large sell off. That sell off pretty much happened within an hour. I did have this area right here, which was pretty much a resistance zone since about late February. It just took so long for us to get through it, and then, and it really didn't take much. I mean, there was a little bit of resistance, a little bit, and then we just broke down. So, as long as this stayed as resistance, it wasn't support really at all. So, there had been a couple reports that there was a large outage in China, in one of the provinces that has a large concentration of Bitcoin miners, and that there was approximately 9,000 Bitcoin that had gotten moved onto Binance, and that Bitcoin possibly could have been in that liquidity, which kind of, I think the dates were right around the 14th or 15th, so sometime last week, that amount was moved. We kind of had already hit, we hit a new all-time high on the 14th. I think that was the 14th or the 15th uh, Bitcoin had been moved. The outages, I believe, were on the 15th. We can just look. So Bitcoin mining, mining outage. There we go. So here we go. But the thing about it was that this was, this happened, way before the outage happened, before the big drop. Like there was a large amount of time before the price actually dropped. It doesn't say when the. I think I saw on Willy Woo's Twitter that he had did a breakdown as far as I might just go there. As far as the whole kind of what transpired, I'll just go to that real quick because as far as what I saw, he had the best breakdown. Yeah, okay, so initial sell-off due to anticipation of miners going offline, sell pressure, long liquidation, long-term fundamentals still very strong. But let's see, this was part of a tweet. So mining hash rate went down. Price kind of sometimes follows the hash rate. So local news before the crash on the 15th. So that was this day. And I think there was a large, 9,000 was moved to Binance on April 16th. So that was this day. We did see a sell-off, but then, so we had, and if I'm being honest, we had, the market itself was kind of net long, so you can see how bullish everybody was, and usually this funding rate is we counter trade this, and now it's decreased, which is actually good. And on the 4-hour, it went negative here on the sell off. That's a large indication of buy the dip. Is this dip over? This is the first time I looked at the chart since yesterday, like really sat down and looked at the chart since yesterday. And I believe whenever I was talking about it, what time did I post? I believe I posted that video right around 8:30 Central Standard Time. So let's see what we have. That was, I'll tell you exactly what time it was, because I usually post it on my Twitter too, whenever it's done loading. So I'll go here. I'll go to my profile real quick. Right here. So I think it was, if I click on it, will it tell me? Yeah, 8:27. So where's that? That's 20, right? Yeah, 20. So 20 right here. That's where I'll just say right here. Within these right here, within this time frame right here of yesterday, is when I posted that video. So, and what I had said in that video is that this area right here should have been major support. And if I looked at the CMF, there really wasn't. There was some buyers that came in, but then right here was where I was concerned. This was still trending down, and once we had this 7 close below this 6, close below this 9, that was an indication for us to sell off. I mean, well, to exit your position. If you had a position that you could exit. We had already gone below the 30 MA. There was a 9 here. We went all the way to a 9 count, retested the area, and then we started to get more weakness. You know, right around when I posted this video, and when I posted my last video, and I said I was a little concerned, you know, 2 below the 1, below the 9. We didn't get really good follow through back above this, what was a resistance area. It wasn't showing much strength of support. And then, you know, no more than, say, an hour and a half or 2 hours later, we had the big sell-off. And I did say that what I do follow and what we saw historically was that we have this stop and reversal point indicator. And it was at 53.2, it was at 53.3, I believe. I can actually rewind this. Where's the rewind? I know I can rewind this. Oh, here we go, replay. We'll replay it here. Okay, so it was at, no, I went maybe too far. There we go, that was this week. Oh, nope, let me pause it. Right here, so it was at, why does it say 50,000? That's not where that was. Oh, maybe we got to go one more week. There we go. That's where I wanted to be. All right, right here. So it was at, no, it's 52.6 on the weekly. I know it was much higher than that. Oh, too fast. Let me do this again. Right here. Okay, that's us going through the week. This was the week right here. Yeah, so it was at 52,998. I thought it was higher than that. This is not playing back, right? There we go, it moved. All right, so 50, this is where it was at. This is where I remember it was at. It was at 53,223. So, you know, if you wanted, you could put it right at that, but if you wanted to give yourself a little bit of leeway, you can put it at 53.5, 53,250. And that's pretty much where I put my buys in whenever I saw that we were breaking down on that hourly, that we could get a large sell-off. I didn't think we would get it that day, but I thought maybe the way the week was closing, it was a reversal doji candle. I really didn't like it. I thought maybe we would get another print. It would be a little bit higher, and then you could set it there. But we hit it that week. I mean, we hit it, you know, yesterday, which it went, like I said, all the way down to 51.3. Had the buy-in, buy the dip right now. You know, and you had, and this is the thing about dip buying, you have to be prepared. So you have to have your orders and you have to be confident in the level that you that you set, because price was here and then it really broke down. And if, let's see where if we can see, you know, so here we had, I think on the 4 hours clearer, because right here we were, no, we saw some strength. That's the strength in that candle. But we had broken down here below this area of support, found support, came up, and then, you know, so we're finding support. Buyers are coming in. What did the RSI look like? RSI had not broken down really yet, but we were at 39, broke down here, negative. I mean, you had a negative RSI with a negative funding rate, massive negative funding rate. Even if you didn't catch it here, that right there could have, I mean, you could have got it in at, you know, 56, you'd be kind of break even right now. So that's why you have to know, you have to set a target as far as if price is going to fall and collapse. Look how negative it went here real quickly. You can see, let's go on the 15 minutes, see if you didn't have, if you weren't confident. Okay, here's the breakdown below the support area. right there. We went negative there. I mean, yeah, you could have. I mean, you have to really have a target in mind before. I set mine, like I said, in the right around the mid 53s. You can see this large sell-off. As far as the dip goes, if you weren't by your phone, you literally had a 15-minute window. Not even that. I mean, it dips so quickly. Let's look at the 5-minute. Yeah, let's say you had 10 minutes. You had 10 minutes to buy. Okay, so here it opened at 50. Now you had less than 10 minutes. You literally had minutes. That's the thing about dip buying, and almost also about catching the top. Sometimes you literally only have minutes to catch the top. It's not like you know, there's not a lot of time to sell the top or buy the bottom, right? You have to have orders in. So here's where it broke down. Open closed at 52.7 right here. So you had 1, 2, 3, 4, maybe 5, 6, maybe 6 minutes. Say five. You had a 5 to 10 minute window, if that. Just say 6. Just say 5 minutes. You had a 5-minute window to catch the dip. You know, so if you wouldn't have had your orders in, you weren't going to get filled. You know, it's unless you're constantly watching your phone, but that's not the way to trade. If you are trading, you have to have an idea of where you're going. And you can see, I mean, this area right here was large support historically. You know, all the way back to maybe, I don't know, say February. So you can see that there's, just as far as the price action goes, there's support here. We can look at the Ichimoku cloud because sometimes that gives us a good sense of where supports areas could be. This right here was at 53.9. I mean, you could have put it up a buy there as well. You know, there's different strategies and systems you can use. This one went, you know, we had support at the cloud. We went below the cloud right there. We're coming, so price kind of usually goes into these crosses. Maybe we get to 58. What did it look like on the hourly? On the hourly, yeah, that kind of followed it, but it kind of broke down. On the weekly, I don't think we got, no, we didn't even get close. So so the daily maybe would have been helpful as far as where you could have maybe used the Ichimoku cloud to maybe put a buy in, but that still wouldn't have been as good as the SAR. So, and what I'm saying about the SAR, if you haven't watched my previous videos, during a bull market, it usually flips. Like whenever price has a dip, that area is usually a good area of, or it's a good indication. I'm going to say in 2017, it was a good indication of that was the you know, the bottom. Like that week was marked the week where it bottomed out and then, you know, continued up. So right here, that flipped it. That was buy the dip. This one right here flipped it, buy the dip. Price didn't go any lower than that. Here it almost went there, but you could have had so this was at say 880. If you wanted to, like I said, give yourself some leeway, you could have put it at 900. You would have got filled. That was the absolute low. Here, right here, it broke down. That was the bottom. That was the buy the dip scenario. This one, didn't quite get there, but this one, it pretty much ran all the way up to all-time highs, and that was the top. So when do you know it's the top? There's other strategies that you can use or indicators that you can use to indicate if that is the top. I don't think we're at the top. We'll look at the Mayer multiple, at least for this cycle. So that this week, if historical price action follows what we saw in the previous cycle, this here should mark the low. Maybe we consolidate for the next couple of weeks, which wouldn't be bad, and then we go higher. So our Bollinger Bands were right. I mean, that dip was, we had been moving, and this is uncharacteristic of the previous cycles, but we had been moving between this bullish extension and this bullish extension zone. Before, usually we would get in it and then we would break down. We get in and break down. Here we found support in it, but now it looks like we've broken down below it. So we got to be mindful of that. Could we go lower? Things are a lot different, or some things are a lot different. Some things are similar to the last cycle. Right now, this is indication possibly by the, you know, this week was by the dip. What I'm really looking for is I'm looking for what these moving averages are going to do on the daily. So prices below the 30, and it has happened before. You can see it here. But this intermediate 8 day moving average never really went below it. I mean, it went below it here. We can look at the funding rate. The funding rate was negative here. So we're going to look at this. If we have the 8 go below the 30 and prices also still below the 30, and then we have a positive funding rate with weak maybe CMF, we're still trending down. If this doesn't start trending up, whenever that actually happens, that scenario that I just described happens, then we could potentially be seeing lower prices, and that would we would get a breakdown. You would see sell off maybe to like 50 with some bouncing. Maybe we form some sort of pattern, some descending triangle, or descending wedge or something like that. You'd have to, trading is dynamic, not static. So we'd have to see the scenario and weigh the risks and the probabilities at that time. But right now we're on the 9. We hit the 9 on the 4 hour, and I did say that if we had that with the funding rate negative and the RSI negative, that could also be an area where you would potentially could buy what many call the dip. Where's my RSI? So here, we'd already recovered. That was your negative on the 7. I really don't like that we didn't get that the 7 wasn't as low as the. I mean, within the rules of TD sequential, I really wish this would have, the 7 or the 9 would have hit here on this lower end. But the way the price action happened in these last 4 candles for the 4 hour, I mean, it's relatively, it's okay as far as the way you would trade this. I'm going to put I don't want to put 2. I just want to put 1 because I would like maybe for this area to get retested and then find some support. Why is there 2? Oh, is that where price is? Oh man, this thing's just laying out a. Oh, hold on. Is it on? Oh, it's locked. That's why. What is this doing? All right. I want to keep on putting these here. There we go. All I wanted to do was put a mark on the low of this 9, which is... Okay, that's where that is. All right, let me change this to... I'll make this blue. And these color codes are just based on the way I keep track of this. So maybe I'd like to see maybe price kind of come down a little bit. Right around, say, 55. Find some support. Let's see if the CMF is supporting that. It kind of is. See if it is on the hourly. Yeah, it is. So there's some good buying coming on the hourly, which will probably start to transition to the longer time frames. So yeah, we consolidate, maybe retest this area, and then find more upward momentum, and we can see where our moving averages are. Yeah, so we're finding resistance at 30 MA, which is not uncommon on the hourly. Maybe we come back here, and then on this next attempt, we break above that. And then we also have forward upward momentum. I mean, this 30 MA on the 4 hour will start to come down. Maybe that reaches, we can pull up the Ichimoku. That might actually cross as well. Let me get rid of this. Yeah, so within the next couple hours, maybe this 30 MA comes all the way down here, meets the Ichimoku at around 58. This would be on the 20th, early morning on the 20th, so 2 days from now. We get some price action that brings us up back to 58. Around this 30 MA would probably come down to about that, after I would say we get back to this 54, say 55 area, find some support, maybe get some little wicks to come down, but find some support and then come up here. All possible. That's a scenario. That's one scenario. That's what I'm looking at. Again, using a combination of some indicators and then this T sequential and Ichimoku and some moving averages, you could see that could possibly happen. Because I did the same thing here on the 4 hour. and on the daily talking about how we could get a high, possibly retest this area, which we did. But then I was really kind of not hoping, but trying to see if we would get some upward momentum and then to go higher and break this all-time high. But we didn't. You can see the CMF had really started to break down. We broke down yesterday a good bit. This is kind of developing into a reversal candle. So we'll see how it goes. That's Bitcoin. And then I talked about Doge last time. I'll talk about Doge again because a lot of people are super interested in it. And it actually held up pretty well. It did. Oh, hold up. Let me look at Bitcoin real quick just because I want to see how much that dip was, how much that drop was. So, because I said 15, 25%, and we went 20%. So that could be enough. I think the worst one we've had so far was around 30% for this cycle. So we're in the, I guess, average area for dips. That could have been the dip. 15 to 25% dips is what I said would be likely, just because the landscape's kind of changed as far as who are the players. Unless you believe that, hey, that was the top and we're going lower, because here's what I think this one was here's that dip back in January. That month we saw that price dip. That was the 31%. That's been the most aggressive dip. This one's 20%. What was the last one? I don't think the last one was this aggressive. Oh, it was 26. So this is 31. This is 26. This dip was 20. What was this one? This one was 18. So we've had 1, 2, 3, 4 dips. This one was in March. This one almost a month later. What's this one? Yeah, almost a month later. What was this one? This was 2 months. Now this is look. So the dips have been happening about a month. So from here to here is about a month. That's about a month, and this is about a month. But we'll see. We'll see. I mean, we'll just, like I said, we have to stay dynamic because trading is not static. So yeah, we had 20%. That could be enough in this 15 to 25%. The worst drop we've seen this cycle was 30. We'll be mindful. We'll see. But we had some good support there. And I'll pull up Doge real quick. Like I said, there's a lot of people that are interested in it. Let's see if they... Yeah, so we're on a 9 on the daily. The 6, 6s can be your highs. The 7, the 9 didn't get there. On the weekly, I think on the 4-hour picked the top perfectly. This is trending down on the CMF, which is saying that we're not really getting buying in. Yeah, see, so this is trending down. This really needs to come. This is where, right here, I broke down before that. But even last night, let's see. Like I said, that broke down at here. So even that drop wasn't, I mean, this drop was worse. And this wasn't even part of it. This is a 48% drop, 46. So it held pretty well. And it is starting to trend back up. So we'll see. There's some support on the hourly, daily, kind of flat. We're on a 9. Maybe you 1 to 4 candle correction, consolidate, and then go higher. Because once you get a green number above a prior green number above this 9, and if this 9 has some consolidation, so once you break above 32, you're going to be in a good spot to go higher. And I'll pull up the RSI real quick, and then I'll move on to, yeah, so we're still over, I mean, this is broken down, but it hasn't really broken down. And it can stay overbought for some time, but it's starting to trend down. Here, we're still overbought. So, man, whenever this thing, and price can still go higher with the RSI going down. We've seen that in Bitcoin here. Right here, you broke down. I mean, right here, you're on the RSI. That's a breakdown. This right here, breaking down below 70, is just indication, hey, there's weakness, and there was more weakness. You lost an additional 24%, so that could have been your exit. Hourly probably went pretty steep. It did, but it's starting to trend back down. So, like I said, there's not really... That would have been nice if that would have been a 9, but it was an 8. And the 8 can be the high for this count if it's above the 7, and it was. So maybe 1 to 4 candles, and then we go higher. But you just have to see how this forms. I still think it's going to go to this 9 right here, which is around 20 cents. Breakdown area is obviously right here, right around 25. So if it can't hold the 25, it's going to 20. Right now, it's just kind of neutral. if not a little bearish, but maybe more neutral. And I'm going to go over gold real quick because it was having some strength last week, and whoa, there's good strength. Well, this is on hourly. I thought that was a weekly, but hey, still, it didn't quite hit my target of 1606, but it got pretty close to this, retesting this 9. I mean, it only missed it by $2, so that's probably good enough. And these moving averages are starting to move up, which is good. So you could have allocated a position right here if you wanted to be safe. And then as this starts to move up, you know, it could find some resistance right here, because since that was the breakdown area. So we'd have to see, you know, maybe it moves up a good bit during the week, consolidate, and then move higher. These moving averages are going to start going. So silver should also be having a good open, and it is, because I did say I opened up a silver position last week based on the way gold was moving. The moving averages were nicer there on gold because they started to trend all down, and then now you have your short term going above your intermediate, and then these will all cross to nicely give you an allocation to scale into this asset if it wasn't gold, but kind of gold and silver move together, and I'm a little bit more bullish on silver. So you know, this intermediate is above, I mean, this short term is above the intermediate and above the long term, but the intermediate is kind of trending down. So if you're allocating a position, maybe you would be like 25% into your position, maybe not full 100% until you probably start to see this 8-week moving averages start to trend up. The 30 MA is trending up, but you would like to see this trend up. And maybe that doesn't get you in until this top, until 27, but that's good momentum moving up, and then you're going to have some sort of resistance, likely around 28, and then if it breaks that, really if it breaks this 30 area, you're probably well due for mid-30s, or possibly, yeah, mid to low 30s. So that's like, I mean, all these moves are, you know, so from here, that's a 6% move, and then so when it's all said and done, you're scaling in. Say you get in right at where this area is right here, say right here, you could look at a potential return of, say, 20 to 25% after it starts to break through all this kind of resistance area. But then by that time, you'd be 100% scaled in. Or you could just use gold kind of in tandem with that analysis, and then just be scaled in once all these moving averages start to go above this longer term, and then you get weekly closes above the prior highs, because the move here, whenever that's likely to happen, I would say would probably be around the mid of this channel, and then you could see a 6% to 8% return with almost the sky's the limit once it breaks above this prior high that it set back in August of 2020. Or you could just, you know, scale into silver based on the idea that it moves with gold, and then you could see a potential, say, what did I say, 15 to 25% possible once you're scaled in 100%. So that's the way I would be, or that's the way I am trading them. Is it the right way? Yeah, what did I say? Yeah, say 15. Yeah, 15 to 25%, or just say, yeah, I'm going to say 15 to 25% potential. Is that the right way to do it? I have brought up this gold to silver chart before. Oh, no, I don't want to do that. Yeah, that's what I want to do. Yeah, here we go. So whenever it's down here, you're going to be buying gold. Whenever it's up here, you're going to be buying silver. This shows the ratio, and basically we broke down, we retested, and now it's trending down, which is an indication that silver is going to outperform gold. So that's why I'm more bullish silver than gold. And then once it gets down to this lower level, that's whenever you would sell your silver for gold or go to cash, and then you could do the trade again just based on the way this is ranging. So, but that's about it. If there's any comments, leave them in the comments, or any requests as far as
price analysis on some assets. Not financial advice, but I'll do that. So I appreciate it, and thanks for watching.